Hey guys, welcome back to another episode here on the membership program. In the past few days, we've released some pretty cool videos, one on NVIDIA, one on AMD, on recent key takeaways from conference events. Today, we're going to take a closer look at another semiconductor company. This is one that I believe is not that popular, but it does kind of talk a lot about the analog space and kind of the embedded market, and that's going to be Microchip. So, Microchip on November 28th was at the UBS Technology, Media, and Telecommunication Conference, and we did learn a lot about what's happening within the market right now. So let's take a closer look and all the key takeaways. So like always, all these key takeaways are broken down into different kind of subsections. We're going to start off with the overall market. In the overall market, we're seeing a lot of consistency with the earnings call. Earnings call were about a month ago, so usually not much changes in forms of market opportunities. They do mention that the company's performance still aligns with projections during the earnings call, which is more of a weak market right now, as there is kind of this inventory correction phase happening in the overall analog space, in the microcontroller space. So we can see correction phase, a significant phase of inventory correction is underway. And obviously, this is a very common cycle in the semiconductor industry, but unfortunately, we are seeing kind of a weakening in macroeconomic environments, which currently amplifies that inventory correction at the space. And they do mention that general market weakness is happening in most markets except a few. The main one that's not really taking it are the aerospace and defense, but everything else are weak globally. Another thing that is kind of impacting inventory correction is shorter lead times. While shorter lead times overall enhances operational agility and the ability to kind of, hey, go from if you need a product, we're able to sell it right away. It does kind of affect the visibility of how the company might do in the future. So, for example, shorter lead times contributes to lower booking and reduced visibility because most customers are like, hey, look, we see that lead times are shorter, so we don't need to make massive orders right now because we know that a month or 2 months from now, we will be able to order the parts that we need. And this is a bit different from where the market was during COVID, right? During COVID, we had very long lead times. And as a result, you had a lot of customers purchase their orders because the lead times were so long, which obviously increased overall bookings, and the company was able to see the visibility that they had a few months or a few quarters ahead. In the near term, they do have the outlook. The guidance suggests a decline in next quarter, but with lesser magnitude than the previous quarter, indicating that, hey, look, things might be starting to turn around here in the overall market. But here I'm taking a closer look at analyst estimates for revenue for the upcoming years, and we can see how estimates have kind of declined in the past. We can see after July of 2023, they kind of took a decline, and most recently, after their most recent earnings call, they also took another decline here. So we can see the market is expected to be weak, but things are expected to kind of grow on the year over year basis over time. Now, in the long term, obviously, like I mentioned, there's huge confidence in semiconductor space. I mean, Microchip, for example, they provide numerous microcontrollers for different markets like EV, like aerospace and defense, like medical, and the list goes on and on. So, right now, while there is the short term pain, there is the overall long term tailwind in the semiconductor space. Some other things, they are seeing some nice momentums. They are experiencing strong momentum in design wins, which are expected to drive above market growth in the long term. So obviously very bullish, and it kind of showcases that, hey, while Microchip might be looking a little bit weak right now, it does seem like they have some nice, great quality as a long-term play. If we take a closer look at now the next key point, this is going to be finances. And if we take a non-GAAP operating margins, they expect to maintain non-GAAP operating margins above 40% throughout this various business cycle. And I think that's pretty impressive that during a downturn they are able to do that. We are going to see that some of the ways they do that is thanks to their manufacturing plants. But overall, 40% above margins is great. Now, if we take a closer look at substantial capital return, this is a company that does return a nice amount to shareholders. Recently, they kind of returned 3.25 billion to shareholders via dividend or buyback. They are trying to do a balanced approach in the upcoming quarters. They're trying to make a kind of 50% dividend, 50% buybacks, which goes really well. They also plan to increase the capital return to roughly 77.5% of free cash flow for the December quarter, which is going to be their next quarter. So that's insane. And again, they expect to kind of divide it very evenly with buybacks and dividends. They do expect by March of 2025, so about a year and a half from now, that they will reach roughly 100% of free cash flow being returned to investors. So obviously that does bode well for investors that are looking for maybe a little bit of growth opportunity, because the microcontroller market does have growth opportunity, but are also looking for a company that is very kind to their shareholders. Overall, we can see the company is positive in free cash flow. They are positive in cash flow from operations. They do have a nice amount of total long term debt, but overall, nothing that I would be worried about, because this company has maintained a very steady, I want to say, a very steady business for such a long time. A lot of that long term debt has also come through acquisitions as well. And I do believe the company is going to continue to pay this over time. Now, there are some key points that we have about the competition. We are hearing a lot of microcontrollers and analog device solutions coming out from China. And the company just mentions that, hey, look, yes, they are seeing competition in China, but this is a market that has always had competition in China. So it's nothing that they're worried about. The other thing they mention is, hey, while we are just, while many people might just see us as a microcontroller company, as analogs company to some extent, the company has various products in their portfolio and plenty of long term customer relationships, which provide buffer against rapid market changes. I want to say, especially if you're in the aerospace, in the engineering team, I remember in my engineering days, once I would pick a part to go for a selected product, for me to ever change that part would be, I would have to jump through so many walls, through so many hoops to make those changes. So those long-term customer relationships are really, really are really strong, right? And they mean a lot. All right, so now if we're going to take a closer look at supply chain, they talk about two major things. First, inflation impact is obviously passing on to customers. So they do mention that recent inflation has led to some prices increase, a necessary step in managing rising costs, but it's not expected to be a regular occurrence. The other thing is the company is doing manufacturing adjustments. For those that are not familiar, roughly 40% of their fabrication is done internally. The other 60% is outsourced to professional foundries. And right now, unfortunately, because of the overall inventory correction, facilities are not operating at 100% utilization rate. And the company, because they have a lot of internally sourced fabrication, they're also able to respond pretty quickly to the overall market and reduce the risk of overproduction. So while lower utilization can definitely impact margins, it definitely helps out with the supply chain, with their inventory, and make sure they don't have too much product building up over time. Now, some pretty cool things that they talk about is their priority supply program. And the priority supply program really came out during COVID when it was introduced to manage supply chain commitments. In the program, right, during COVID, like we mentioned, customers didn't know if they should order or not, but Microchip said, hey, look, if you don't order or make these long-term commitments, then you're going to be on the bottom of the line, obviously. So work with us and we'll work with you to be able to kind of have the product that you want, and we'll be able to have the kind of investment and the capital that we need. The current state of it, though, is definitely a bit different, because we're no longer in those long lead times. Now we're in those short lead times. So the program is becoming a little bit more flexible, especially in terms of rescheduling capabilities. Where before it was no cancellations, no rescheduling. Obviously, it is a whole different market. They still have more of a non-cancelable way of within the program, but they do have flexibility on rescheduling. And I think that is actually pretty important for management to understand. The market is evolving. You have to evolve with the market. You have to make your customers happy, but at the same time, you can't be fooled by them. So you have to kind of be strict with certain things, but be flexible in others. And this overall helps with, like I mentioned, risk management, which allows them to make sure they're not overcommitting resources during an uncertain market condition. So obviously strong there with their PSP program. Now, another great thing is obviously when we think of microcontroller, we usually think about it as just a microcontroller company or just an analog company to some extent, but they do the total system solution strategy. And this total system solution strategy, I do believe, is what makes them a little bit better than the competition. This includes silicon, this includes software and system to offer a comprehensive solution to customers. So this is very strategic, especially in the early stages of customer engagement, because this allows them to kind of use all of Microchip's technology that they have and all their products, which obviously means better wins for Microchip. Um, so this is a business impact because the more chips that you use, the more average revenue per user, better margins, and better customer solutions. So we've seen it in numerous ways. Here, I'm going to showcase how a microchip offers pre-engineered total system solutions for the DG family, which is some form of network line card. And here we can see how there's numerous microchip technology products being used here, from FPGAs, from Ethernet switch, from PCI switch, and the list from temperature changers to fan controllers, clock buffers, and the list goes on and on. So here again, like I mentioned back in my engineering days, once you have a chip, it's going to be very hard to kind of change it later on once the product is being mass produced. And this does both really well for the company. And I do believe this is one of their total strengths, that they have this kind of total system solution. All right, so microchip technology right now is sitting at 22% year to date in returns to investors. I do believe microchip is going to give us a lot of buying opportunities throughout the upcoming quarters due to the vast amount of uncertainties. I do believe in the long term, though, microchip, in my opinion, is one that I do enjoy. It doesn't mean go out there and buy it, but it's one that's in my portfolio and I definitely enjoy it. But like I mentioned, this is one where I would personally do small dollar cost averaging. I really would enjoy this in the mid 70s and below. That's when I do believe it's a big buying opportunity for me. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.